to Looking at the Markets with David Modell. Today I would just like to make a quick video with a tip for users of Bollinger Bands, especially if you like to make volatility plays. If you like to buy a straddle or strangle when the Bollinger Bands contract or squeeze because you're anticipating a breakout in one direction or the other. In other words, when the Bollinger Bands get tight or close together, maybe you'll buy a straddle or buy a strangle, or use some other sort of volatility play because you're anticipating that after a Bollinger Band squeeze, there's going to be a release or expansion. And that would benefit you, of course, if you had purchased straddles and strangles. So let's take a look at some examples. This is Intel. This is the daily candlestick chart, and I'm using stockcharts.com for my charting. And here's an example of a Bollinger Band squeeze. And if you had purchased a straddle or strangle here, or made some other play in expectations that volatility would pick up in the stock, you would have done okay because right after the squeeze was a release. As you can see, volatility did pick up. If you had purchased right here a straddle or strangle, you'll see that the stock went down sharply, and you would have done okay. And if you had held on even longer, then there was a really big move there. On the other hand, see that's an example of how purchasing a straddle or strangle immediately can be a good thing, okay? And waiting would have been you would have missed out on the move. You would have left money on the table, so to speak. But on the other hand, let's look at over here. The Bollinger Bands squeezed here, and if you had purchased a straddle or strangle, let's say you had bought one, a straddle or a strangle with an expiration date 2 weeks out. Okay, so you gave yourself 2 weeks. Well, you wouldn't have done too well because it just kind of went sideways for the next couple of weeks. All right. Whereas if you had waited a couple weeks, all right, in other words, maybe wait until the Bollinger Bands have been contracted for a little while before buying a straddle or strangle, then you would have done better. If you had bought it here after the bands have been very close together for a while, then at least you would have caught a little down move there. All right, better than if you had bought here. All right, here's another example. The Bollinger Bands squeezed here, but if you had jumped in immediately for a volatility play, for the past couple weeks, it's gone not very far. It's gone almost nowhere. All right, and so you probably would have not done too well if you had purchased a straddle or strangle here. All right, so you'd have to wait at least a couple weeks if you wanted to, get a big move either direction. So these two are examples of how it's probably better to wait a little while. And the longer, in my opinion, the longer that the bands have been close together, the more likely a volatility increase is going to happen. In other words, the longer the bands have been squeezed, the more likely it is that you're going to get a breakout in either direction. Okay. Now, if you wait, which I recommend, the one disadvantage is that you'll miss out on opportunities like this, where a breakout happens immediately after the squeeze. But I'm a more conservative trader or investor. Okay, I don't mind missing out on opportunities if I get a higher probability setup, and I believe it is higher probability if you make a volatility play after the bands have been squeezed together for a while. Let's look at another example. This is Yum Brands, okay, daily candlestick chart. And if you had purchased a straddle or strangle here when the bands squeezed together, you'll notice, and let's say the expiration date had been 2 or 3 weeks out, you actually wouldn't have done that well because it looks like volatility was going to pick up, but it really didn't. It really didn't. The price really didn't go very far. It kind of ended up where it started. And so, but if you had waited a few weeks, then at least you would have had a nice up move. And if you waited even longer, you would have gotten an even better up move. All right. Here's another example. If you had purchased a straddle or strangle here when the bands squeezed together, well, for the past couple of weeks it's gone almost nowhere, so you wouldn't have done too well. On the other hand, here's where a squeeze happened and there was a sharp down move and then an even bigger up move. So if you had purchased a straddle or strangle here, yes, you would have gotten a volatility increase almost immediately. But here and here, it would have been better to wait. As for me, again, I'm a more conservative type of trader, and so I like to wait until the bands have been squeezed for a little while, and then if I'm going to jump in, that's the time when I would do it. Okay. Yes, you'll miss out on the immediate, payoff on, instances such as this one, but I'm willing to leave money on the table if I can get a higher probability setup, which I do believe you get if you wait until the bands have been squeezed for a little while. All right, so that's something to think about. And if you'd like more help with this or with trading, investing, options, stocks, finance in general, or just putting together a trading plan, you can contact me anytime at David Modell. That's Moadel, davidmodell@gmail.com. Also, if you like this video, please give it a thumbs up on YouTube. You can leave a comment, that would be great. I always like to read your comments. And subscribe to my channel so you can get the latest updates. Alright, so thanks a lot, and I hope to hear from you soon.